Welcome to the weekly Crypto Check-In, your go-to podcast for navigating the wild world of cryptocurrencies, hosted by Robert Swarthout and Andres Sandate. Today, recorded on February the 12th, we're diving into the latest market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Hey, good, Robert. Good morning. I can't believe it's already closing on Valentine's Day tomorrow. I'm maybe not be the only husband that's behind.
And, you got 2 days to Valentine's Day.
2 days.
Yeah.
Well, I have to plan a day ahead because
there you go.
I'm always going to be running behind. But I was at the store this week and I'm like, oh my God, those flowers and all that red and pink. I mean, this is only one big holiday to around the corner, so I gotta get organized. No, the month of January just blink and you're gone. And here we are in February. I know we're going to talk about what's going on in crypto with this market structure bill, but I'm good. How about you?
I'm doing good. I leave to go out of town for a couple weeks tomorrow, so I'm looking forward to that, but trying to, get everything done before I need to go. So on the topic of red, we'll get to it, but I'll kind of, I guess, give a small teaser. February has been red, not for Valentine's Day. It has been a crazy volatile month in crypto, volatile to the downside.
But
we'll get
about it.
So anyways, kind of jumping in here, the first topic. And this has been a theme, and I think this theme of talking about the market structure bill in progress is a good thing. I would love for it just to be signed and be done with, but rather than just feeling like nothing's happening, we're kind of seemingly make some progress. So again, as a small recap, there's basically two versions of the bill in the Senate. There's the one that talks about the commodity side of it, and the other talks about the security side. The commodity side was in the Senate Ag Committee, and they passed that out of committee on the 29th of January on a party line vote, so 12 to 11, which was a little bit disappointing because for a while it looked like it was going to be bipartisan, but not that it really matters at this point. And we are now just kind of waiting to kind of see what comes of the negotiations from the banking committee side when they deal with the stablecoin bills, the stablecoin yield. And yield, the banking lobby doesn't want yield. They think it's bad for functionally. The banking lobbyists are saying it's bad for community banks. I think it's probably just the opposite, personally. But that is their argument. And the White House has held a couple of different conversations about it, and we're kind of still in this holding pattern. So that's where that's at.
Yeah, the Ag Committee vote was close. I think it was my notes are saying 12-11, right? And along party lines to advance this version, which is called the Digital Commodities Intermediaries Act. So it's it's like you said. You hate to think that this gets caught up on yield around stable coins, and it's interesting because I saw a friend of mine make a post on LinkedIn that he was at a big banking conference. Most of the attendees were representatives, leadership of community and regional banks. And I asked, the two big things that were sort of, I think, on the agenda at the conference were technology and just how AI and technology was going to impact not only the banking and financial services industry, but, more industries than that. But the other thing I was curious about was this, concept of stablecoin yield and what impact that would have on I guess the business model if you did have banks that were just unwilling to adopt crypto or digital assets, and if there was a true threat that they felt. My guess is a lot of the community banks are probably more invested in the lobby, and the lobby is probably representing them, but it'd be curious to hear what the actual bankers themselves are saying. Do you feel any like sense of like the midterms are coming quicker than you had anticipated when you looked at this whole bill like 3 to 6 months ago, and that could start to creep in to the
I think there's certainly some of that, but I stay optimistic, and maybe that's just by nature for me, but like that we will get this thing done, because even let's see, which senator was it? Senator Tim Scott was saying that he feels like this is going to pass out of the Senate eventually with bipartisan support. That's a talking point I get, and maybe it's a hopeful talking point, or maybe it's realistic. But I think that he, at the same point, maybe believes it, and hopefully it's true. I would love this to be a bipartisan supported thing. And I actually have a kind of some notes here that somebody had put together and kind of what the process is, say, assuming it gets out of committee. So then Majority Leader Thune would have to decide to bring it to the floor. There has to be, if there's unanimous consent, debate will move fast. It's unlikely to be unanimous. We'll say that up front because there's going to be some opposition for sure. There can be debate. It has to be 60 votes to move past the debate threshold, and that's going to take some Democrats obviously to be on board. And then it only takes a simple majority to pass out of the Senate, and if they pass it as is, then it's not necessarily in line with what the House had passed last July. So the House has got some decisions to make, and it likely turns into a committee, a conference committee between the two, the House and the Senate, to kind of figure out what goes forward, and then the House would deal with it, then on to the president's desk. So even if we quickly move past the stage that we're at, we still got a ways to go. And I think, to your point, the midterms are quickly going to end up feeling very close, and hopefully this can get across the finish line before that. So.
Yeah, and I think the fact that the two, I guess, industries stakeholders are talking, right? There was a big event on February 2nd where the executives from Ripple and Coinbase and Circle and others convened and met with a bunch of banking executives to talk about, is the this concept of yield. The other thing that's looming out there is the amount of money that's been raised by PACs to impact the midterm elections, whether it goes the way they want or not, right? So I think there's a lot of incentive out there from from the standpoint of if you're looking at a tight election race in a congressional district, you've got to think that there's a lot of pressure to get something done before the end of the second quarter. Certainly into the fall, I think all bets are off, but hopefully before the Labor Day holiday, there's something that can get done. I can't believe we're saying that. It's February, but yeah, I mean, I feel like, these things unfortunately always end up taking much longer than we'd want. But it does feel like there's some progress happening, and the fact that the two regulators, Selig and Atkins, are at least talking and publicly, presenting, it looks like a unified front. I think there's a lot of momentum to try to get something done.
Yeah, agreed. So hopefully the next time we do a podcast, we have more of an update, but that's at least what's happened over the last 2 weeks. And maybe there'll be more progress here soon. So moving on to our second topic, it's kind of something fun that I kind of ran across. We've talked a lot about ETFs, and there's different products, crypto products coming out these days. But this is an interesting one. So this is the Cyber Hornet S&P 500 and an XRP futures ETF. Kind of a weird blend. So
mouthful.
So 75% of it, the holding would be in the S&P 500, and 25% would be XRP futures. I'm interesting that somebody dreamt this up, thought there was enough of a demand. I just looked it up as we were talking here. The AUM is still super low. It's like basically $500,000. So not huge interest, but this launched on the 29th as well. So.
Yeah, we had talked about this offline, the amount of product innovation. I don't know how innovative it all is when it's just sort of replicating concepts and ideas from other asset classes. But nevertheless, this is definitely an area where you're seeing in the ETF space across the last several years, you're seeing this huge amount of product proliferation as people, whether it be advisors, traders, institutions, are looking for ways to make and express very specific and precise views on the market and get very specific exposures. And there seems to be no shortage of ways that product, manufacturers or asset managers can meet that demand. But yeah, I think the biggest challenge is, the cost to run these products is not cheap. And, is there enough liquidity in the underlying product itself and the underlying holdings? And then, are these derivative-like and very esoteric ways to express a view? Is it hurting crypto? Right. This is one of the questions that I know I threw out to you.
I mean, I maybe there's a strategy around this, but just the ticker on this thing made me kind of go, why'd they do that? It's XXX. So it's just kind of like, I don't know, maybe it catches eyeballs. it probably is not the right association with crypto that I would want.
Right.
But I guess interesting nonetheless. So, and as crypto gets through this, hopefully this regulation in place, and there can be more of a grown-up type asset class, maybe some of this other craziness that happens around it kind of subdues a little bit. So, so our third topic, and kind of hinted at this initially, is volatility. It has been 100% volatility to the downside. The last, since August, it's largely been down and to the right. Maybe a few days of reprieve here and there, but it's certainly down. I mean, Bitcoin from its high back late summer, early fall of 125,000, call it, was down over 50% as of this last week.
Yeah.
And we're technically still not in a bear market. It's crazy to think we can have a drawdown like that and still can be considered in an at least in a sideways trend, if not an uptrend with a drawdown. So yeah, it's
well, there's no question the crypto winter, whether it's a technical bear market or not. I mean, the crypto winter is upon us, and anybody that's been in the space for some time has seen these episodes before. I mean, the hard part is it seems like it happens far more frequently than it would in the area where most investors have exposure, which would be the equity markets,
right?
Where you see a big pullback, maybe once every, on this scale of 50%, like once every generation,
right?
And you're seeing periods of volatility in the equity markets far more frequently in the last 10 years than you did in the prior 100 years. But you'll have 3 or 4 days where there's a discussion in the market around the impact of AI, and is the CapEx too much? Is it not enough? And then, there's people making money in that market, and there's people not. And then it's like the media cycle moves to another narrative. In crypto, this thing is set in a little bit. And the thing that you look at and say, why is this happening? All the research and reading I've done is like, there's all these different theories as to what's going on, from the Fed policy to the new incoming Fed chair to all these hybrid products to, institutional profit taking and a lot of leverage, excess leverage in the system. I'm curious what you think, because I know you spend a lot of time looking at the technical factors and reading a lot of I guess the social media X circuit, where a lot of people in the space spend time.
Yeah, so just to kind of put some more numbers, currently Bitcoin's at 67,000. It briefly broke below 60 into high 50s, kind of recovered that level. I guess the bellwether for Bitcoin, when people kind of pay attention, at least name brand wise, the last 3 years has been MicroStrategy, right? They are now at a paper loss because I think their average is roughly 76,000. So call it 9,000 above where we're at now. There's been different things I've read, and you can't really say here's the smoking gun. It may be multiple things. I do know that the order books largely have been very thin the last couple months. So the bids to support anything up or down, it could go quickly in either direction. It just needs momentum. I think so. That's part of it. And a lot of this is algorithmic trading. So when something starts to cascade like it did like a week ago, some of those bids that were the thin book becomes even thinner, and people start really trying to like bottom catch really aggressively. So you have that, and then there's just people doing analysis on Coinbase versus Binance versus all these other exchanges, and over the course of the event a week ago, 3 times as much Bitcoin was sold, market sold on Binance than it on average did for Binance. So Binance, not to say it was the contributor, but it definitely fueled the fire. And it was thousands of Bitcoin. So it's enough to start moving the market. There's been theories I've read about, was there a hedge fund somewhere that kind of blew up and had to get out? Potential. I don't know. At the end of the day, to me, this is noise. Although I did feel this one. Like I was telling Casey on his podcast recently, that, I have friends that will text me on an average crypto day. It's up, they're down 3, 4, 5%. I'm like, I don't care. It's 3, 4, 5%. If that was the equities market, people are losing their mind, right? But when it comes to crypto, my threshold is kind of 10% up or down. That's when I start to, I guess, notice it and think something may be happening. Not that I have answers, but so that the day that it was down 15%, followed by, I think, another day of 10 or something, it was aggressive. And those are great days to get outside and do basically anything else, like, instead of paying attention to the prices. So.
Yeah. Well, and the thing about the space right now, and that this whole asset class is, there is not yet enough just general ownership across all these different, largely popular tokens, right? Everybody talks about Bitcoin and then Ethereum, and then there's sort of everything else. I think that XRP gets a little bit more attention, and certainly there's others, but it just the notion that Bitcoin's down and therefore everything is down, right? We call that correlation, I guess.
Yeah.
Is there's still so much correlation in the market and in the asset class. And so it'll be interesting to see, as more ownership of this asset class takes hold and we get more institutions that are long-term value oriented holders of the asset class, does that change, these periods of volatility? You'd hope so.
Yeah, I believe so. And I'll add a wrinkle to that. I believe once there's regulation, and granted, I beat this regulation drum to death over the last couple of years. Once there's regulation, I believe that the tokens that are actually going to try to solve problems will be able to attempt to solve those problems and be used for those. And it's not just about the price and speculation at that point. It's about utility. And I think you start to see the market act differently. Sometimes people will use the analogy, the tail that wags the dog. Well, in this case, Bitcoin is the dog. So it is definitely wagging the tail. That is the altcoins. But I think over time that starts to shift, and at least that mentality is different. So, I guess a good segue here. Part of that is 24/7 tokenization and trading. So we talked a couple of episodes ago. We talked about the NYSE is in NASDAQ is trying to move towards a 24/7 trading model, 24/7, 365, actually, I believe. And Brian Armstrong, so the CEO of Coinbase, kind of tweeted this. This is not really news. This was just more of a interesting observation. I guess I would put it. So the regular U.S. stock market is only open 19% of the time. So 9:30 to 4, Monday to Friday. And I think you back out some holidays there. With extended hours, it's only open 48% of the time. So it's kind of crazy to think that tokenization will bring more than double the amount of time that is available to be traded, and to me, solve a lot of problems. So kind of cool little anecdote there.
Yeah, I mean, I think it's I think from the standpoint of what happens after trades are made, right? That whole process of settlement and assets transferring, from party A to party B, and just other things. If you look at alternative assets, I think that there's a lot of questions out there, and some very legitimate around some of the more illiquid assets and the infrequency at which investors can really get like a real NAV, a true NAV, because there's not a lot of trading happening in those assets. I mean, it's the secondary market for alternatives is still very much in its infancy, even though it's, billions and billions of dollars of capital are deployed into secondary markets for private equity and for other asset classes. It's still very much a institutional process. And I think tokenization starts to create much more transparency, much more price discovery, hopefully a lot more true valuation when it comes to these underlying instruments. I don't know how many people will wake up, when we see tokenization at the institutional level and say, I got to have this at the individual retail level or the advisor. But you'd think that over time, if we look at other technology, the adoption curve will be pretty quick. And more and more asset managers and more products will be available to trade 24/7 as there's a buyer and a seller that, want to transact.
Yeah. And I think the cool thing about it, once things are tokenized like that, you end up in like this DeFi world. It's not just like taking dollars and buying some secondary product. you literally could have, I don't know, use an example of, you have a herd of cattle that you want to sell, and you want to buy some real estate. That kind of thing can happen in DeFi, right? Like, as a single transaction, as weird as that sounds, versus making the multiple hops that you would have to do in today's world. And it would take a while. And again, the true thing, the exciting thing for me, that I look forward to, I think almost certainly realize here, is once there's 24/7 and things are tokenized. I mean, when you sell a stock, you actually think about settlement these days. You're like, oh, I'm not going to get my money for another day, and I'm gonna have to wait. That goes out the window. It's going to turn into, like, you literally go to the store to buy a coffee. You get your coffee in that moment. You don't got to wait till the next day to get your coffee. So it'll feel much more natural, I think, and to the point where people will stop thinking about settlement because it just happens in the right moment.
Yeah, I think my final thought would be is with tokenization, my hope is that it creates, like, kind of going back to what I was saying, is I hope it creates liquidity and a marketplace for illiquid assets to find liquidity. If a seller is looking for liquidity for whatever reason, that they can go using the technology, if you will, simplifying it, of tokenization to find, is there a potential buyer, right? So if I own a piece of real estate and I'm ready to sell that real estate, is there a process by which I can use technology to put that asset out there to the world of potential buyers and transact, and do so quickly? I hope what tokenization doesn't become is the notion of all these folks rush into the space to tokenize your asset, but there's no liquidity, right? So all we're doing is putting, if you will, we're putting a wrapper on an illiquid asset, but there's not a liquid marketplace, to your point, with a buyer and a seller that are willing to transact. Who cares if it's digitized? Who cares if it's tokenized, right? If it's a bad asset, I don't want it. If it's a bad price, I'm not paying it. So we'll have to see how those two those are not the only considerations, but I guess from my standpoint, I think about tokenization, and I think liquidity, and I think price discovery, and I think a true NAV, and I think market efficiency in more illiquid assets. What I hope it's not is just a real shiny wrapper, the latest one, it's going back to our second headline about just another product, another wrapper on an asset that has some structural challenges at times, that we're seeing with various private credit managers, to just pick one area.
Yeah. Actually, a great example of what you're talking about there, whether there is a two-sided marketplace or one-sided marketplace, maybe the next topic. So diamonds tokenized on the XRP ledger. So $280 million in diamonds were tokenized. Ripple helped this project do this, which is cool. I mean, $280 million. I mean, that's real dollars. So they're tokenizing them, trying to help with this, the buying and selling of diamonds here. But is there a market that wants to buy diamonds that are tokenized? I could kind of see that happening here, because people want to buy a real diamond versus a lab diamond potentially. But I don't know. It'd be interesting to see kind of what traction this gets over time.
Well, I would just bring so many thoughts to my mind around the whole diamond trade, right? It's a fascinating industry, not without some level of controversy, to say the very least, around sort of the source of the diamonds. They make movies about this stuff, right? But the thing that I guess I come back to is diamonds, real estate, cattle, whatever it may be, these assets, these hard assets or physical assets. So they're tokenized. I can see where that provides proof of ownership and or allows liquidity. I guess my big question would be, when it comes to, like, these are unique, rare, one of a kind assets, much like art, right? Don't you have to see it? Don't you want to inspect? I mean, if you're a collector, that's different, right? You've got an agent, you've got somebody buying for you at an auction, right? You're a known quantity. I'm curious who the players in this tokenized market would be. It's probably bigger institutions.
Yeah,
I would think.
Yeah, I can't imagine, like, somebody's trying to buy a diamond for an engagement ring, and they're trying to buy the tokenized version. I just that world, I don't know. Maybe it exists, maybe it will exist. I don't know, but it doesn't click for me. So,
yeah.
Anyways, so this next topic, I will admit, I had zero expectations that crypto and Jeffrey Epstein would ever be linked. But boy, man, as some of these files for his stuff has been released, the news or people were digging through them and found out there was actually more links than anyone would ever have expected. So I think the big one here is in his, I guess there was emails that people saw, but that he claims, Jeffrey claims that he had spoke with Satoshi. Okay, interesting, because in theory, people don't know who Satoshi is, or there's no one talking about it. But when early on, I think it was in 2014, there was kind of this kerfuffle that happened within the Bitcoin community, and the support for paying developers that were working on the software of Bitcoin kind of dried up. So apparently Jeffrey came in and was paying roughly 60% of the developers' salaries for a period of time. And, and at some point at one point, he was the #1 largest single investor in Coinbase. Like, holy crap. Like, the amount of ties here, there was emails where XRP and Stellar were referenced, trying to figure out they were worried about them taking Bitcoin's market share. There was all sorts of things twisted in on this. I'm not sure I'm a fan of any of it personally, but it did happen. Whether it's true or not, I guess up for debate, but at least it was claimed in the email. So kind of a crazy, bizarre world here.
Yeah, I mean, crypto, you and I have talked about this. I mean, you've been in this space much longer than I have, but I mean, even just over the last 3 or 4 years, I mean, it's been, as we've been, talking about this industry and working together on Teton, it's interesting that there's so much more happening in crypto that obviously we don't ever read about, we don't ever see. We all probably underestimate who actually is involved in crypto, whether it's as an owner who's backed different crypto ventures over the years. I think one thing that's really fascinating about what's happening with our current administration, right, is that the 2 Trump sons, well, 3 actually, if news and media reports are accurate, like they're heavy into crypto, right? Heavy, and they've gotten backing and support and partnerships with foreign governments. We've talked about on this show, some of the Middle East and Asian institutions and investors in those particular regions of the world are, arguably more aggressive when it comes to crypto than the institutions have been here in the U.S. So it's such a spider web of who's involved in the space, who's touched the space in its early days. I would say, if you went back and looked at the early days of the internet, when it went from sort of a government research project to, becoming what the, World Wide Web became, I wonder if it was the same level of, I guess, intrigue and sort of a lot of these backstories, because you think when there's this new technology, there has to be capital in order to, to keep things moving along. And it's just hard to know, like you said, what's reported, what's true. It's certainly not the end of the story with respect to crypto and some level of controversy. I think that it's just the nature of how big it's gotten and the number of parties it's touching.
Yep. Absolutely. So we'll kind of move on to our last topic here. I thought this was a cool use, and it's kind of like a no-duh moment at some level, but like stable coins are being used by YC. So YC is probably the biggest, and if not one of the biggest
accelerators.
I think they have multiple places now, but they started out of California. And a lot of the big tech companies over the last 15 years have kind of started their journey from there. But the news here is they're giving the founders of these companies that get granted access to YC, because they get a $500,000 check as part of the deal. or an investment in their company. So they can choose to receive that in USDC, the stable coin, via Ethereum, Base, or Solana. So 3 different networks. The cost is going to be less than 1 cent. So it's effectively $500,000. But the cool thing is if you were to leave it, obviously they need to start spending some of the money to actually try to build their business. But the money that they're able to leave in, say, a Coinbase account can earn 6 to 9% yield. So that could be, $30,000 to $45,000 a year on $500,000. So,
the standard terms for YC have always been 7% for $500,000 in cash, and so now these founders are going to get a choice to basically. It's kind of an all or nothing thing, is what I'm reading. It's like you can take it in stablecoin or you can take your cash. The interesting thing is they can take it on Ethereum Base or Solana, is what I'm reading.
Yeah.
So, and this was sort of the brainchild, I think, of a founder that was early in crypto, or is.
I didn't read anything about that, so it would make sense. But yeah, it's. I think it starts to open the door to potential LPs that are making investments in funds that aren't fully deployed initially. Like they're going to all potentially want to do this because they want yield on their cash that's sitting there that's been called. So, I could see this quickly evolving to where most deals or most funds are doing this. Because it's easier. You don't have to deal with bank wires, admittedly, and you get yield. And this is only going to further power the stablecoin narrative around them buying treasuries and the yield. And again, what the banking committees that our first topic was talking about was fighting over is who gets to keep the yield. Is it the banks or is it the holders of the stablecoin? So,
well, look, if there's one institution, I guess, or organization that should theoretically be ahead or forward thinking when it comes to payments and settlement and custody and all this digital, whether it's 2.0, 3.0, whatever we're on, it should be an accelerator type organization where innovation and disruption and, I guess, progress around the next hot startups or who are the next, entrepreneurs that got a great idea. It should be them, so it sort of makes sense. Will be interesting to watch and see how many of the companies and their founders elect to take stablecoin versus versus cash.
Absolutely. Cool. Well, that's a wrap for this episode of the Weekly Crypto Check-In. Keep updated with the latest crypto insights by searching Teton Crypto Capital or the Weekly Crypto Check-In on your favorite podcast player. Leave us a review or like our Teton Crypto Capital LinkedIn page. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.